Counting down the days, the future feels so distant. A lot of things have changed, and few have been resistant. Is moving, and the power you misused will soon be your undoing. We'll give you what you need, though not quite what you were meaning. What you have sown, we are the song of this new machine. So lay waste to all we've made for your corporate palisade. You won't automate our roles if we digitize our souls. A new force will intervene, half human, half machine, and no enterprise on earth will make us kneel to your empire of steel.
Happy Wednesday, everybody. Boom. Okay, I'm only 4 minutes late today, and given my my record in the last couple of weeks, 4 minutes late is pretty much like being early. So I'm very happy with that. So, yay me. Let's bring up the chat. Who's here today? Oh, I'm getting pinged. Who's this? Tony just messaged in the network. Am I missing something? Music is going, but no IC is going. And let's just go into the network. Yeah, can you guys see me okay? Everything fine? Oh, you're here. Tony's here. All right, cool. All good. Everything's fine. Don't panic, everyone. Don't panic. You just messaged too soon. Oh, because like, was it just like sitting at on this with background music? Yeah, I know. You know, just takes me a second to get into it. You know, when you hear the music change from the Empires of Steel and it changes to this music, it means I'm about to come on. I'm just sort of, you know, twiddling with knobs and things. Anyway, hello Fatima, hello Tony, hello Marcus, hello NetBroker, and hello Tony. Oh, there's two Tonys. There's T Tony 4444, which is the one. Okay, that's the Tony with the technical problems, and then there's Tony with a Y. Nice. Welcome to another Decentralists. This is the Wednesday edition, which means we've got one more this week, and then that's it for another week. Today, this is exciting news for all of you that you all care about. Today, me and my friends finally decided on an apartment we're going to be moving into, and in the center of Warsaw in Poland, and we move in on the 1st of May. And until that time, like, we're moving out of our current place, and then over the next month, I'm going to be just sleeping here in this studio. There's a little bed in the corner, and I'll be fine. And then I'll be moving out of this studio and moving into that apartment, and I'll be setting up this studio over in that apartment, and that'll be really cool. Isn't that exciting news? Aren't you glad you tuned in? Okay, so the point of today, I'm making a point to actually have a point in each show I do. And so yesterday I won a big old, it was a rant show yesterday. Big old rant talking about the values of decentralization and what the Decentralist live stream and the community, you know, that's going to grow from that, what it is, what the vision is, what the plan, all the things. So that's that's all the last stream. And today we're going to be jumping straight into Bitcoin. And I want to talk about, now, this isn't the first time I've talked about this, but there'll be people watching this now and maybe in the future that they either haven't heard this before or they need to be reminded. I do talk about this in the course, and I have talked about it on the live stream before, but because it's something that I think might transpire, I think it'd be kind of cool to I suppose, go a little bit deeper and talk about it a little bit more, give some other examples. And then maybe we can do like a bit of an exam, a test, a challenge. I can show you something and you can tell me whether or not this is this or this, you know, and you can give me your answers. I've changed the lighting today as well. This should be more purple than it was last time, and I've made that light a bit dimmer. I don't know. I know you guys care about this. There's some light engineers out there that really care about the lighting. Tony says, congrats to the new place. Yeah, thank you. It's only renting. We're not buying the place. I'm a believer in renting. Again, I'm a decentralist. I don't like to, at least at this stage in my life, I don't want to create a single node that I can't escape from at the moment. So, has anybody been in the charts, either analyzing? Has anybody been paper trading? Has anybody been trading for real? Has anybody been investing? Has anybody been doing anything? If anyone's over in Rumble watching, we've got a couple of people over in Rumble. Come in the chat, say hi.
Really attractive women are.
Fatima says, no, I don't know how to do that. Don't know how to do what? All of the above. Are you in the Wave Counting Immersion program, Fatima? Because that's what that does. Yes. What don't you know how to do? What module are you on? And by the way, I'm gonna have to start talking about that differently. Not yet, at some point, because I am going to be breaking down the wave counting immersion course into separate courses. So rather than a big, scary, intimidating, huge program, which is what it will be when it's completed, or the way it would have been if completed in its present way, it's going to be broken down into sort of an intermediary trading, kind of a trading operating system. That's kind of how I'm thinking about it. And then there's the wave counting immersion course, market geometry course, order flow course, etc., etc. And since it's been brought up, the way that I'm thinking about it is, I think one thing that is, I don't want to say unique about what I teach, because I know this is not from me, but it's something that is not taught enough, and some people don't teach it. When people talk about trading, they just really focus on jumping into the methodology kind of thing. And I think there's some people who, if they go down that route, they fall in the trap of thinking that trading ultimately comes down to the actual analysis method, which gives you the edge in the market, so to say. But I think that if they end up believing that, it's because the person who's taught them, probably because they just it's so ingrained or so kind of natural to them, they forget this essential component. And so people take these trading courses, they learn about support and resistance, and all this kind of stuff. And I'm talking from experience. When I took God knows how many courses that taught all the shiny things, how to use this indicator, how to put this on your chart, how to add lines and stuff. And it wasn't for like a good year or two, I think, before I learned I call it the operating system. Like the way I'm thinking about it, because the operating system, for those of you who've gone through the course, the operating system is, hey Esther, the operating system is the macro game plan of what trading actually is, devoid of any specific methodologies. What trading is, what is a trade setup, how do trade setups work, how does market structure work generally, what are trends, how do you know the highs and the lows and market structure, how to analyze risk, understanding risk, and once you've understood risk, how to manage risk, understanding risk to reward and all that stuff. That's the trading operating system. And that's something that experientially people first getting into this are not taught. And so they have to go through this like jungle of learning indicators and things, and they're not making any money. They're losing because they haven't been given the operating system. And the way I'm thinking about it is, you have the operating system, and then what runs on an operating system, that's where you have the applications, right? But you need the operating system for the applications to run properly. And so Elliott Wave principle, which is the core of was the core of the wave counting immersion course, will be the first application to run inside the operating system. And then we've got market geometry with Andrew's median lines, and then we can have order flow, then we can try having like this indicator or this different kind of setup, and those are the applications. And as a trader, you need the operating system. There is no way around it. You need the operating system. But when it comes to the applications, that's down to your particular trading style. As a scalper, Elliott Wave maybe isn't that, you think that, you're just not that into it. Even though it can have like macro implications, but maybe you're the kind of scalper where you don't care about the macro. You want to just dig right and deep. And so Elliott Wave doesn't really help you. So you're focused more on order flow, volume profile, all that kind of stuff. So you can install the applications that you want that fit your trading style. And so that's kind of how I'm thinking for this trading educational journey. So rather than just scaring people with some epic course, which is how essentially it's teaching you my particular method, the combination of Elliott and market geometry, and later we're going to be adding order flow once I deep dive into there. We're going to be breaking it down into the segments, which makes it much more palatable and also much more open to other people's pathways they want to take in their trading journey. But the beginning will be the operating system. Hello, Luke. Fatima says, none of that at all. I'm not good with it at all. Well, I would say if you're having trouble with anything, this is the thing. This goes out to everyone, whether you're on this course or on any course. You've got to be proactive with your learning. If you're taking a course and you get stuck at some point and you don't reach out and ask a question, whether to the community or to whoever, you're kind of slipping into a victim mentality where it's like, oh, I don't get it. And then you start telling yourself some narrative of like, oh, it's because I always suck at doing this, or blah, blah, blah. And you start telling yourself some negative story, which is like a victim mentality. If you get stuck with something, be active. Don't accept. Not accept. Don't just resign yourself with, oh, I don't get it. Like, not getting it is normal. Like, if you're learning something new, the normal progression is you try and learn something, you don't get it because you haven't done it before, and so you reach out to someone who understands it, or a community of people who are learning, and you say that you don't judge yourself, you don't tell yourself some negative story about the fact you don't understand it. It's just, I don't understand it. Like, that's just the journey of learning anything. I don't get this. You got to get rid of your ego. You got to be willing to ask for help. Say, I don't get this, and then they explain it to you and say, oh, okay, well, I think this, and you go, okay, cool, and then you move on until the next time you don't understand something. Like, the whole journey of learning is basically feeling like a fool, feeling like an idiot. And I think you're limited only to the degree that you are willing to feel like a fool and an idiot. Don't be like the classic cliche of the man with a map who doesn't want to ask directions ever, because it's like a hit on his ego. No, like, you will progress only as fast as you are willing to feel like an idiot and ask questions that you think are stupid questions. You've got to be active. You've got to be active in your learning. And so don't make a general statement like, oh, I just don't get anything, because that's you're falling into that victim mindset, because it's not actually true. Like, there are obviously some things in the course you do get, right? And so that blanket statement of I don't get everything or whatever, it's like it's a narrative you're spinning, and it's not actually true. The truth is, you got to this module and the second this certain thing came up, you start to go, oh, I don't understand that. Go back to that point right there, and then that's the bit where you just need to work on that. And say, work on that. Ask questions in the network. That's why the network exists, right? Just take ownership of your journey, but don't fall into that victim mentality, right? I'm not having a dig. This is to everyone. Like, we all can fall victim to this because we get frustrated, maybe, and we maybe compare ourselves to others, which is, again, just telling yourself a story. It doesn't actually exist. Anyway, hopefully that helps. Netbroker says, yes, I've just taken a paper trade short entry. I'm assuming that's Bitcoin at 28,474. Okay, well, it's come down a tiny bit. And your stop loss is 29,198, which is... Well, we'll go look at it in a second, actually. Netbroker says, only learn from your mistakes. Yeah, mistakes are just lessons that you learn and grow from. The pathway to greatness in anything is paved with mistakes. That's it. And every mistake is something that you can either beat yourself up about and think, oh, that mistake shouldn't have happened. I'm an idiot. I'm always making mistakes. I'm never going to get this. I suck and blah, blah, blah. None of it's true. It's just it's kind of tapping into some childhood trauma or something, and this is the power of trading or anything, right? You make a mistake and it just it just takes you right back to that bully laughing at you in sports day when you fell over or something. Who knows? You've just got to be willing to make those mistakes and just realize that those mistakes are the lessons. The faster you can fail, the faster you'll learn. The thing is with trading, obviously, the best way to fail is with paper trading when you first start, obviously, because otherwise failing can be very expensive. And when you're learning, it doesn't have to be. You should fail with a paper account, which means paper trading, which means like with you're simulating the trading. And only once you have demonstrated to yourself that you can be consistently profitable paper trading, do you then move on to trading with real money. And even then, it's a very, very small amount. And then it's just about the transition from obviously simulating, there's no money at stake. It's like there's no real emotions. And then it's transitioning to using money, a small amount, where now there's the emotional element, and then you can build from there. And so there is a way to learn trading without losing any money, hypothetically, Now, obviously, emotions are no joke. Okay, let's have a look. Okay, let's have a look at NetBroker's trade. What's he doing? So NetBroker has a short open. Let's draw NetBroker's one. So 28,474. So about there. I'll just draw this. Oops. That's a short position. And this is 28,474.76. $28,474. There we go. There's NetBroker's position right there. And his stop loss it was 29,198. 198.22. 29,198.22. Okay, first question for you, NetBroker. Explain to me why you put your stop there. As in, I want to just, I'm not saying this is wrong at all. I want to hear your thought process of why specifically you decided to put the stop loss right there. I'm just interested to hear your answer. And your target, your take profit is 23.95. 23.95. So all the way down here, 23. So is your wave count different than this? NetBroker says, first of all, I have to show you my pitchfork. Ah, you're doing some market geometry. Okay. Right. So have you got a pitchfork that goes like this? Where would your pitchfork be? Is that your pitchfork? Yeah, you can't post links into the comments on YouTube. If you want to send me a chart, you've got to go into the network and send me a DM. Yeah, that pitchfork isn't really giving me anything. Although maybe you could try a shiffity doodah. Yeah, that works. Looks not with a shift pitchfork. That gives you a. I mean, there's not really a break of market structure, but you've got 2 touches there, which is a potential entry, and it's kind of hit the median line really nicely. So you're saying that you think this is now it's hit the median line and now it's traveling back. Pivot points 28th of March. I'm on the 1 hour chart, by the way. I mean, it's what's the date today? It's 29th now, so 28th. Right, so you want to put a pivot point here? No broker. So not here, the low the low of the swing. You've put yours on the next one over. And this is a regular pitchfork. Because I'm liking this one so far. Because you know, even the geometry passing down here. I do like that. And look at that. The difference, however, is this wave count that I've got is expecting. Now, again, what I'm going to say, don't let this question your decision. You have to stick with your decision. It's paper trading, but still, don't let me influence you. NetBroker says a modified shift. Okay, let's give that a go. A modified shift, and you had your pivot point over here. I'm not quite sure. Well, for me, the shift is giving me more. We've got that nice touch up here. We've got these 2 contact points in the lower parallel. Anyway, so. Nothing has, in fact, so last time you see these, the green lines. So we ended the stream yesterday, let me see, the 28th yesterday. So we ended the stream about here, right? So before we had this, this move up, we had price come up just a touch, I think to here or something. And then I drew this and I said, in fact, this is going to be the theme of today. NetBroker says, no, that is not my pitchfork. Mine is bearish. A bearish pitchfork? Going back to March the 25th. Oh, that's only sorry, for some reason I thought that was a long time ago. But it's not. March 25th and sorry, November 22nd November. What? 22nd November. Okay, I think you're looking at a daily chart, aren't you? Okay, let me go back. Is it this one, right? What? November 22nd. Okay, so the bottom here. Okay, yeah, cool. That's where I've got my one. And then March 25th. Okay, March 25th. Yeah, I don't understand what you've done. Hey Fezza, good to see you. Yeah, Netbroker, I don't know what you've done. If you've got a pitchfork from the 20th of March. Oh, the 20th of March 22. Okay, I'm getting confused. So 20th of March 2002. 28th of March 2022. Oh, from up there. Yeah, I played with that pitchfork before, but then Price started to respond to my other one. Well, I mean, we've got like a, this is on Bitstamp. We have this little spike up, but that spike up only happened on Bitstamp. It didn't happen anywhere else. So that's the only reason why I'm not including that. Okay. So, I mean, there's not, in terms of the entry, it's not really much, different. Whether it's the white or the, personally, if you're going to choose one of these two, well, first of all, you see what Price is responding to, and then you would make your choice. But in terms of entries, it's kind of the same kind of thing, right? You'll be using the same, it's the same idea, just with slightly different angles, and you would just use whichever one Price was responding to the most. So essentially, you think that's the end, which is what I was starting with that hypothesis. That's why I created this, and I played around with that short idea. If you were there the other day, yeah, you were there, Netbroker. But then recent price action. So the downward pitchfork pivot point was right here, right? And then price came up, and actually where it stopped was a perfect ping of that upper parallel. It's literally the upper parallel was like right like that. And because I had the other upper parallel of the one I just showed you, the one that I think you're using, which was kind of very similar. It was kind of like that, you know. Oops. But because price had responded to this one, I just thought, well, let's just get rid of this. We don't need it. Let's just work with this one. And so that was based on the assumption that, okay, this entire move is finished. So wave maybe a 3, 4, 5 ending diagonal. And then with this nice impulse down, breaking this immediate market structure. And I thought, okay, if that's wave 1 of the coming bearish move, then we would expect a corrective move upwards as a wave 2. We got a corrective move here, right, very, very deep. And I thought, okay, well, if that's a wave 2, then we're going to expect our wave 3, right? This would be like a base channel, and here comes the wave 3, and we got more corrective structure sideways. And just the way this looked, I thought this doesn't look like a corrective 2. I think this is still ongoing, right? This is still ongoing. Let's get rid of that. And so we were looking at this as an A and as a B. And literally, I think the last hypothesis I had yesterday is the last one that's here. I said, look, I think with this move up here, onto a lower time frame. Yeah, here we go. And we've got a no, we don't need that for now. And so I was looking at this, going, okay, so if this is a wave 1, and let's say this is a wave 2, I thought this could be, no, I didn't like this corrective structure as a wave 2, so I thought, okay, I think this is wave 3, and this is the wave 4. So this would be an impulsive A, and then I thought this is like a nice A, B, C, D, E, a kind of a contracting triangular B, and then I thought, this could be the C. Another idea could be, I forget exactly the different ideas I had yesterday. Oh, that was it. So I thought this could be a 1, 2, and then the first hypothesis was this is a 3, and then this was a 4th correction, and we were due another push down in the 5. And then we had this this corrective move up here, and then we had this corrective move back up here. And it started to just look really deep for a wave 4. 1, 2, 3, and we started to get really deep. And then that's when I had the idea for this hypothesis, which is still on the screen, which is a wave 1, 2, 3, 4, very tight, quick 4, and then an ending diagonal 5. I think I even drew it up. Here we go. I drew it up here. So 1, 2, 3, 4, and then a 1, 2, 3, 4, 5 ending diagonal. That's what these represent, ending diagonal. And then a wave 1, a correction. I think I added this later, but we had this little move up. And then I said if price goes past here, then this is definitely the right hypothesis. And then that's the kind of trajectory we would be looking for if this idea that I talked about plays out. And I'll go through that in a second, like the potential manipulation. And so far, that's exactly what we're getting. So I'm just wondering what your macro wave count is, not the market geometry. NetBroker, I think rather than like dating pivot points, the fastest, easiest thing to do is to like copy, go up here, right? Copy link to chart image, and then go into the network and DM me, and I can just bring it up straight away. Right, it's the easiest thing. And so, according to your trade, you think this is the end, and for that to be true, you know, you've got to what's the wave count? What's the macro wave count? What is this? You know, if this is wave 5, then let's have a look at that, because we could get a failed fifth. But because according to my favorite wave count right now is we might be moving into an ending diagonal, wave 1, 2, 3, 4, and is this like a wave A followed by a B and another C up? So if you weren't here on one of the previous streams, on yesterday's stream even, I was hypothesizing that because we've got these key levels here. NetBroker says, no, I'm not saying it's the end. End of what? Oh, the end of the upward move. Because if you've opened a short position and your stop loss is here, obviously you think this is the end of the bullish move, and you think it's going to start going down now, like by definition, right? You've entered a short trade, so you don't think it's going to go up and hit your stop. Otherwise, you wouldn't have entered the trade. That's what I mean. And so that's not what my wave count is predicting. I could be wrong, obviously. I'm just drawing I'm drawing lines on a chart, right? So I'll be interested to see your hypothesis, your wave count, so I can see like what led you to this idea. You might be right. I might look at your wave count and go, oh, that's a pretty good idea actually. Yeah. Well, like, all we're doing is looking for trade ideas, and all of our drawings, all of our little crayon drawings on our charts are us employing the various methodologies that we've learnt to, you know, that recognize certain chart patterns and certain events and things that have certain probabilities of happening, and then when we get really good at that and we understand risk management and understanding risk assessment, all that kind of stuff, then you know you can make money. But at the end of the day, you are still drawing lines on a chaotic chart that represents the individual, voluntary, anonymous actions of thousands and thousands of individual emotional traders and institutions who are all trying to make money, you know. And so the best we can ever hope for is just an edge, right? An edge, a probabilistic edge. So me saying, well, my forecast says, not I say, the forecast says the price is going to keep going up, doesn't mean that's what's going to happen. It just means that the lines I've drawn point to that. But you know, all it means is, and this isn't particular, like I haven't pointed to any particular trade setups, although this hypothesis down here might have been an interesting entry, but it's not my perfect kind of entry. So if this plays out, I want to talk about the psychology of it, so that when you're in a similar situation, you might have these thoughts, and it might help you, because you see this happen all the time. The late Timothy Morge called it the wash and rinse, and it's essentially, as I mentioned on the previous stream, where there is a bunch of liquidity above or below a key level, and then institutional traders who okay, what do I mean by liquidity? Some people might think, well, what do you mean liquidity? In an exchange, you have the order, the buy orders and the sell orders. So let's color the So let's say this is the order book, and you've got the buy orders over here, and the sell orders over here. So these are people wanting to sell their crypto, and these are people wanting to buy their crypto. In fact, it should be more like this. So, no, it's the other way around. Sorry. So this is like the order book. This is the current price here, and I'll write this in. So let's just. In fact, we can see this is the price line here. Let me go over here. Okay. So this green line this is the price, and then above it, we've got all the sellers who want to sell at a higher price. See this green price? This is the price, right here. And so above it, we've got in the order book, sitting in the order book, are the limit orders. You know, there's market orders, limit orders. Market order just takes the nearest limit order, and when you type in a limit order, you say what price you want to buy or sell at. And if you're wanting to sell above the current price, it goes into the order book and it's ordered according to the price that you set. So, you know, the closer you get to the current price is, that's the price that is in the order book. And if you want to sell like way in the future, you know, for loads more, then you'll be way up in the order book. But it sits there waiting, and that's above the price. And then over here, you've got the buyers who obviously want to get it cheaper. And so you might have a buyer that wants it to come down just a little bit. And this is how stop orders work, right? You've got your short entry order already in, and if it hits this price, your stop is essentially an order that goes in, and it just sits at that price. And the second price comes up and hits your order, it goes through, and you get out of the trade. It's just like you close your position, and because you've got a short, it's a long that kind of counters that. And then the position is closed. You're selling, or depending on how it works, you're selling your short contract to somebody else who wants to go long. And so when it comes to liquidity, right, sit in the order book above these areas, right, and this is 30,000, right, and it's a key psychological level: 30,000, 20,000, 10,000, 40,000, 50,000. It's key psychological levels. It's called the Schelling point in game theory. It has no, in terms of like actual significance, it's just another number. It's no more significant in terms of the fact it's just a number. It has 5 digits. 30,000 is no more significant than 29,992. But for human beings, it has significance because it's 3000. It's clean. And so it has psychological significance. And slightly below that, there's also this point of control key price level, which goes back to the May 2022, and price it's coming up to it, right? And it's just like a block of high volume around these price areas, and I've got this this zone area, and this level right here was the highest volume price right there at about 29,500 ish. And it's the monthly point of control level and sort of volume area, right? So there's these like key levels, and within there, just towards the upper part of it, is the 30,000 price level. And so that means a number of things. When assuming, depending on what the price action does as it approaches it, it might form a pattern. And one of the things I was saying on yesterday's stream is that certain patterns can be kind of manipulated to make sure those patterns do happen. Patterns that would make traders want to go short, like a double top or a head and shoulders pattern. And double tops are the easiest to manipulate because you just have, as soon as it reaches that 30,000, the whales can come in and just sell hard and make sure it doesn't go further, bring it down a bit. And as soon as it comes back up, you sell hard again and you create those double tops. And maybe it happens again, you get 3 double tops. In other words, you get a situation where retail traders looking at this go, oh, look at this, price isn't going to go above 30,000. When it comes back up, if it comes back up, or maybe at this point it comes back up, I'm going to go short and place my stop where? Up here. And so the stop sits up here in the order book, right? As a counterpart, as a long position, right, sitting up here, and so tons of people go short, and all the retails put their stop losses up here. Just hypothetically speaking, this is a key level, right? And then so when the institutions and the whales are happy that there's a ton of liquidity up here, right? Because if they just go short now themselves, their orders are often so big they will move the market, and fine, they might still make money, especially if the price just really does carry on going down. But you know, they want to get into the best positions possible because they're moving so much money. Often they don't have as many opportunities as everyone else has to get into really great positions. They have to really like wait for these great moments, and they have to not have to, but they want to get into the best situation possible, and so they need liquidity. In other words, if they're going short, they need counterparties to that. So they need people to buy those short contracts off. In other words, people going long, they're going short, they need to be making those trades with other traders who think the price is going to go long. And if they've got tons of money, they need other people on the other side. And so there's two ways of doing that, and it can be combined into one. One is if there's a situation where, whether manipulated or just a natural part of natural price movement, you get a reversal chart pattern, double top, whatever. And again, this, you can manipulate this. It's called engineering liquidity. And so they go short. They do this, right? They go, right, yeah, I'm going short. Yeah, they all go short, lots and lots of shorts, right? Boom, 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 and all this liquidity, all the stop losses up here, let's say, you know, whatever. Down here, there's all the shorts and all this liquidity. And this is, all these short positions are all in the order book up here as longs, essentially, to go against, to counter their short. And then when the institutions are happy, boom, they blast the price up. And then you also get a double effect of, when it blasts up, you get a lot of breakout traders. What do the breakout traders do? The breakout traders go long here, and then they create their shorts here, and they go long. And who are they buying these longs from? As in, the counterparties are people going short. Who's going short? The institutions. So you've got the stop losses, you've got the breakout traders who have their long positions set here, right? In the order book, and the institutions are gobbling all of that up, right? And then what happens? They blast the price right down. The the longs, they get all shorted out, and these shorts have already been stopped out up here. And it's just an institution that they now have all of that beautiful liquidity from the breakout traders and the shorts getting stopped out above those key levels. And so that's all that liquidity, and they get into it. They get into these great prices up, up here. And so, does that make sense? By the way, I explained it briefly yesterday, and I'm sort of trying to show you in terms of the order book, where those liquidity is literally orders sitting in the order book in terms of stop losses, and also with the with the breakout traders who think, right, if it goes above 30,000, I'm getting long because that means it's going to go long. And it could, 30,000 is a psychological support or resistance level, but could be this point of control. It could be a key support and resistance area, using just classic support and resistance. Hello, Shirley. And so when you start to approach a key level like that, especially if you've got a similar wave count to mine where you're expecting a big downward move, combined, I'm just keeping this on this chart, so for example, if we do start to get a top formation here, right, some kind of top formation, I personally would want to create a short above 30,000, you know what I mean? And I'd keep the stop nice and healthy, and I think it'd be fine to keep it healthy because nice and bit liberal, because of the potential profit target. Again, we don't know how far it's going to drop, even if it does drop, if this wave count is correct. But I would be expecting a drop. I would. But I think we're just getting towards a situation that might be ripe for a manipulation of institutions looking for liquidity. But this is just the thought process. This is the way I'm thinking, and this happens all the time. Let me see if I can find some recent examples. Marcus says, yes, it's good info. Good stuff. Let's have a look. Yeah, that could be one, right? So you've got this sort of level here, and you see this just this dip. That's one example. It hasn't dipped very far, but that dip, and that could be a wash and rinse of just going down and grabbing that liquidity, because people come down here and they think, right, I'm going to go long, put my stop loss just below this level, and they just pop it down just with a little bit of force, and they've got their buy orders already, and they're the counterparties to the stop losses. And again, the breakout traders go, right, if it breaks down here, this isn't a perfect example, but they might think, if it breaks down here, especially if it breaks down below this point, I'm going to go short. And they go, so you can see that there's little things like that, and this is why you have to be careful with your stop losses to try and protect yourself against these manipulated moves. Oh, let's get rid of that or that. You know, is that little move for wash and rinse? Not as clear. That one's interesting because you've got this you get this break in market structure, and then you come down here and look, you get a change in market structure. So lower lows, and then a higher high compared to maybe this point and this point, and then you've got, it comes up. It doesn't create a lower low. It breaks past this market structure, and then it starts to come down. And then you can imagine people going long here because you've had this move up, and you're thinking, man, yeah, I think this is going to go long. And they were right. And you know how many people would be so frustrated. They go, right, I'm going long. I'm placing my stop loss down here, and how this, how frustrating is it going to be? It pops down and then comes right back up. And this is why you've got to be careful. And when you've got your targets, like let's say your target is up here, well, this is a 9.3 to 1 reward to risk ratio. When you see this kind of thing set up and you see like a level like this, just before you put the trade on and before you're putting your stop loss on, put yourself in the position of an institutional trader who has a lot of money, and they're going to move the market if they just go all in with their trade. And so they want to engineer liquidity. So it wouldn't have been that difficult to push it up, with a really strong move here. To this is where potentially manufacturing liquidity, because then it comes back down, and right, and then lots of people going long, and maybe some people going short down here because they're breakout traders. And again, both those combined. And look what happened. You get this spike down. All this is institutions. They've got their buy orders down here. So there's somebody who I saw who said, I think, kind of great advice if you understand this and you're kind of watching out for this. And it was that is the best place often to place your order is where everyone else is placing their stop losses. Now, that as a general statement, that's obviously not always true, but just bear that in mind when you're placing your entry, when you're placing your orders, you're placing your entries, and you're thinking about where I'm going to put my stop loss, because just be aware that the institutional traders are looking at the exact same chart, or probably looking at the exact same chart you are, and they are looking at, they're anticipating where all of the liquidity is, in other words, where all these stop orders are. And then you might, again, depending on your risk reward ratio that you're going for, you might want to just, factor that into where you think you're going to put your stop loss, because you have to factor it in. It's like, to not factor that in, to not factor in what the big guys are potentially going to be doing. Look, here's another one up here. Maybe. Yeah, I think so. Right, you've got like a lower, there's like a, yeah, this high doesn't break this high. This high doesn't break this high. This high doesn't break this high. It looks like, is it going to change direction? Pop up and then come all the way back down. So it's not unusual for it to do that, to do one final, like to sort of break market structure. It looks like you're getting lower highs. right? Lower high. Lower high. Another lower high. And then it starts to come up one more time. And you think, oh, brilliant. Right, yeah, nice stop there. I'm going to put my stop loss. I'm going to be quite conservative and put it just above that one there. There you go, beautiful. And then you're going to just hate it. And this is why you think, oh my God, the market is against me. The market knows. No, the market doesn't know, but the institutions know. They can't see it, but like, come on, they're looking at these charts and they just know. Like, of course, someone's gonna place their stop there, and of course they're gonna place their order there, and of course they're gonna place their stop maybe above this point here. And if you'd have placed your stop just one bit, just above that bit, you'd have been fine, right? So not the first market structure, not the second, not the third, but the last one. And given the potential reward to risk ratio, you know, assuming that was in your analysis, you can afford the stop. As long as you've got at least a 3-to-1 reward to risk ratio, you can afford that stop. So I'm not saying, look, this doesn't happen every single time, but when you get the sort of the breaks in the market structure, just factor that in when you're placing your stop loss. Let me see if I can find some more examples. Oh, look at this. Perfect. Absolutely perfect. So this line is a point of control. If I go back to, God, where is it? I forget where it is now. Oh no, it's not a point of control. That's 20,000. That's 20,000. That's why no, that is not 20,000. 21. Yeah, I don't know what that is actually. It's a high there. Is it a point of control? Yeah, I don't know what that is actually. Okay, well, I guess it's like a resistance point here, breaks down, and then you've got this touch here. Again, look at this, perfect. It touches this point here, it comes up, it breaks this market structure, it comes back down, and actually it's not perfect. We do get a touch, but it's a little bit lower. So if this was slightly higher, that'd be a great candidate. And as it comes back down again, there'll be lots of people going long, let's say, placing their short here, their stop loss here, and again, institutions come along and gobble up that liquidity. I'm not saying guaranteed that is exactly what's happening. I'm saying it happens. It happens. Here's another. Well, maybe. And not so much. But that could be it, maybe. Like a breakdown, like that kind of like breakdown and straight back up again is usually like an interesting candidate for it, especially when you've got some kind of floor. It seems like some kind of floor is appearing, right? A bounce, and then like you think, oh, okay, I'll go long, and then it snaps back down. Yeah, look at that. See that? So price comes down and it bounces off this level, comes up. It's not a perfect example, but you see like a little dip below that line. Just a little dip. I'm not saying that is 100% what's happening. It's institutions every time. This is not a perfect example. Because really, when you see the institution stuff, you see it blasts off normally after that. So that's probably not a great example. Anyway, I think you guys get the idea, right? That's kind of my lesson for today. And I'm sure you guys have seen it a lot. I'm sure it's happened to you a lot. And like even stuff like this, right? You've got this. I think this would be like one of those kind of key support and resistance levels. Support, resistance, support, right? Support breaks down, and then the breakout traders, especially when it breaks down below this point, right? the breakout traders. And if you're breaking out trading, you might place your stop up here. And again, just, I mean, this is a crazy move, but boom, just go in and catch all those stop losses and then blast the price back down. Like any kind of sharp, unusual moves like that, I believe those are whales and or institutions. That's my kind of my feeling. It's my feeling. We've got 7 people watching on Rumble. Anyone in the chat in Rumble? Does this make sense? Yeah. Who yawned? Who did I make yawn? Oh. Yeah. All right. So, you know, again, we're going to see what happens. This is something that's going to unfold. If it does unfold like this, it's going to unfold over the next week. So, Karen says, yes, that's happened to me loads, Andy. It happens to everyone. So just be aware of why it's happening, because the feeling of like, man, like it's almost like the market knew exactly where my stop loss is, because I placed my stop loss, my long there, my stop loss here, and then price comes down and goes boop, and just like boop, just beeps our stop loss and almost like hits it perfectly, like boop, and you're like, come on, what the fuck? The market is like, it's like ha 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 ha, and you're kind of right, but it's not all the other retail traders, unless the really savvy ones. It's because like you know, crowd psychology is it creates patterns for a reason. It's because you think I'm being unique in placing my stop right here. No, you're not. That's the textbook place to place the stop loss under the immediate market structure. You've got some signs that price is going to change direction, and so that's the sensible place to place your stop, and all the institutions know it. They all know it. That's where all the liquidity is. So just boop, grab that liquidity, and off it goes. P-Blom says, I tried all of them, YouTube, Rumble, and now Twitch. Twitch has been the best video quality. Cool. Okay, good for you. I'm not controlling the video quality going to the different platforms. I'm just sending it out 1080p. What's the bit rate? God, I should experiment with the bit rate to make the quality good, but whatever we're doing, it's working. There's no dropped frames I can see here. Like the CPU usage right now is below 9%. It's only 30 frames per second, but you don't need 60 frames per second. This isn't some sort of like high level gaming channel, so that's fine. But I could probably up the bit rate, which would that be the better quality? I need you video engineers, you stream engineers out there to help me with that. But this seems fine. Everything seems fine. Oh, Barry's sent me a message in there, in the network. Oh, so NetBroker. Okay, so I'm assuming you don't want your name in the network to be read out because you've got a different name on the chat. So unless you tell me otherwise, I'll try and remember not to do that. But if you want to keep yourself anonymous, I would recommend having an anonymous name in the network as well, because otherwise I'm going to be like, and name says, well, actually I just said it, didn't I, beforehand? So I'm going to download this image. In fact, I'll just pop it on now. There we go. So this is what you just sent me, and this is the short position. So there's the little short position, but where's the, oh, here's the pitchfork here. So yeah, I get you. So it's okay. So it's okay. I think I get you now. Okay, so let me just close all these as well so I don't get like messages popping up. I should have done that beforehand. I've got Telegram, WhatsApp, and Skype open, so let's quit that. Okay, so if you've got this bearish pitchfork, so am I getting where your pitchfork? Am I getting it wrong? Is your pitchfork coming from here? Right, is that where your P1 is? Because that's not really giving much of a. It's not really giving that much of a different angle. Like it's something like that, and according to this chart, again, ignore that little blip there. That's only on Bitcoin, Bitstamp. On your chart, you've got this move up pinging your pitchfork, whereas mine it blows all the way through. So I don't know where your pitchfork, your P1 can't be here. Then it must be kind of down. Is it here? Is that where you've got your pitchfork P1? And that would create that ping point. Because if that's the case, I don't understand why that point here is significant. It doesn't seem like a significant pivot at all. That's the next biggest pivot of significance. But really, this is the main one, obviously up here, the huge pivot up. And here we have the push down. And this is the next biggest one up. So here's the thing, man. It's like you can find, well, if I put the pitchfork here, price has pinged it perfectly. But, you know, at all times, the price would have pinged at any point here. You can just stop and go, oh, right, yeah, right there. So this isn't a pivot of significance whatsoever. So there's nothing to suggest this pitchfork, assuming this is what you've done, to suggest this pitchfork has any significance whatsoever, because this is just sort of arbitrarily placed here. You see what I'm saying? And again, I'm assuming that's what we're looking at here. I think that's what you did. Looking at the angle of this, it seemed to match over here as well. Now, price might fall from here, but I'm saying the pitchfork that you've created, it doesn't. The pivot points haven't been created from key swing trend direction changes, which is how you're supposed to draw your pivot points. Does that make sense? Yeah. So if that's the reason why you've done a short trade, I think it's a bit baseless. Now there might be 100% might be other reasons to do a short trade, but if that's the reason to do a short trade, then it's a bit of an arbitrary pitchfork to have been placed. That's my feedback. And this is why I think, even if you pick a great, use a great pitchfork with great pivot points, even then, this is why I think Elliott Wave is so beautiful, because it adds this extra contextual analysis of the crowd psychology. It's like an extra layer that just goes really, really well with market geometry. Now let's actually add some. Like I already did it, didn't I? I did a pitchfork, but it disappeared. So we go back to the the shift pitchfork, which I really liked. I mean, that is. I'm going to keep that. I'm going to keep that on the chart. Even though price broke down below it, but it is on its way up. Maybe change to a shift. I mean, yeah, I'm going to change that to a shift. No, okay, I'm going to keep that as a regular, and what I'm going to do is I'm going to add a shift on top. Oh yeah, Marcus says you're looking at me. Oh yeah, this is what I meant. I meant for you guys just to look at my face. The answers are here. I should not zoom in when I've got a monster spot on my face. I should refrain from doing that. But you guys, boom, there we go. Sorry, my bad. Thanks for letting me know, Marcus. Okay, Marcus is the is one of our engineers today, 100%. You guys got let me know when these technical issues come up. Actually, let's just change the color of that now. Let's make that. Let's go for blue or red. Let's go for blue, I think. Yeah. Let's get rid of that. Also get rid of this. And this is going to be a shift. In fact, let's make the purple a shift. Maybe a modified. Price is responding to that shift at the moment based on this. Okay, so let's keep that. And then we've got our regular pitchfork right there. So we've got these two pitchforks, and we're just going to watch to see if price action responds to any of them. And that's it. And let's see if there's any other pitchfork. There might be something we can do actually. Yes. Or maybe I've already done that over here. No, I haven't. Yeah, I think the 4-hour chart is the right place for this. Let's try a regular. That's the bottom. And where's the top? I think that's the top right there, isn't it? Kaboom! Boom. And let's make this... the first warning line, and that let's get rid of these. Yeah, price isn't really responding to this upper price. It's kind of wraps around it fine. Doesn't really respond to it much. Although we've got price. I like this. There's a potential geometry here because price climbing up that median line, breaking down below, and finding support, breaking down resistance. So there might be something interesting with this line, and so let's just keep that up there. What I might do is just kind of make it just so it's there. So we've got keeping an eye on it, and that's interesting. If price were to come up and come up to here, then we've got a potential energy point right at the top of this point right here. Something just to kind of keep in mind as just an interesting focal point. Oh god, thanks Kaz. Andy, no picture. Yeah, sorry. Okay, let's come back to my beautiful face. Yeah, just remember when we first started doing the streams in the new studio? Not this one, but the one before. This was happening all the bloody time. Just give me a second to see if I can fix it. Oh, no, wrong button. Oh, it was working for a second. NetBroker says click on the small screen in the lower left. No, I'm using different like software. It's not about like you can see the what is it? There we go. You can see me in the corner, but I can't click on me. It doesn't work that way. It's not how it works. Okay, so hopefully it didn't blank out too long ago, because I only glanced up and I saw Engineer Kaz's Engineer Kaz and Engineer Rob. Yeah, Kaz and Rob in unison together. Yeah, but it's cool though, because it's right here. Because when I first started, I've got all these screens now. I'm not even using all these screens at the moment, except I can see the Rumble here, and I've got a web browser here if I need that, and all the chat and the stream is all up here, and it's really cool because just a glance and I can see it. Yeah. Netbroker says, I see it only shows recording. What do you mean? Rob says, only cut out 1 hour ago, don't worry. That's fine, just an hour, it's not a big deal. Yeah, that's fine, in that case you haven't missed anything. I think I've just been rambling on about some nonsense for the last hour, so let's get serious now. Let's no more rambling. So yeah, I created this pitchfork for lols, from this low point here up to this high there, to the low swing there, and I created this pitchfork here. I've made it a bit grey, just to chill it the fuck out, so it's not giving us a lot of grief. And let's do another one, just to kind of, again, we're going crazy, man. You can't stop me. I'm going to do pitchforks for days. Andy, stop. You've done too many pitchforks. Get the fuck out of here. You can't stop me. You can't control me. Get the fuck out of here. Trying to stop me doing pitchforks. Get out of here. All right, let's just change the color of this, just so we can have a good old look at it. And is it giving us anything? Oh, shit. Right into this energy point. Interesting. And let's also look for potential sliding parallels. Look at that. I think this is not a new pitchfork. I've even got this like saved somewhere. Oh, that's interesting. But I remember I noticed that before. Yeah, potential geometry, like mirrored geometry. It might end up there. That's interesting. I forgot about that. Interesting. Oh yeah, we've already done that pitchfork. There you go. That's an example. Oh yeah, I remember this one was giving us a lot of. This frequency was really, really nice. And look, another warning line. Nah, I'm not going to keep that up. What else we got? No. Lots of old stuff. Old. Old. Lots of old, but interesting. Any of these? Yeah, a bit old. God, this is so messy, man. Like, that's the only bad thing about TradingView, and I haven't really seen a trading platform with a solution where all of there's an object tree, but you can't organize it properly. You can't have folders within folders. You know, it's just a big list of stuff. And you know, imagine if we could have it was beautifully laid out with folders within the folders and all kind of stuff. So okay, so there is a pitchfork I'm pretty sure that I created, because I remember this beautiful geometry here where we had this like break of market structure up here, and then with these multiple touches, great short entry opportunity. And so we had price come up, find resistance on the median line, broke up a little bit, came back down, blasted through, and this would have been an opportunity, I think, here for a sliding parallel. In fact, I'm sure I've got this somewhere. Like, let's say, actually, let's get this line straight. So sliding parallel about there, and then if you mirror that, sorry, phase shift, that's the other side. It's perfect, right? So it's a beautiful phase shift, sliding parallel, right? See that? It's like the same geometry, just shifts over because that's how far it went outside of the median line. And the first thing you would have done is also create a mirror as well. And so the mirrored sliding parallel would be on the other side of that, and it doesn't. Yes, pretty cool actually. Look, price comes right back down the other side and finds support there. So it's like it mirrors it perfectly, and then you get the breakdown into the sliding parallel. Let's make these nice and green so we can see what they're for. And then as price comes back up, we would then continue the phase shift up above here in the same distance. Or would that be a mirror? Well, a mirror. No, I think we'd keep it as because it's responding to the phase shift. But if in fact, if we mirrored it really nicely, look, on the other side, it would create this nice mirror over there. And so that takes us into our energy point. That's interesting, isn't it? Look at that. Look at this mirrored geometry. And so, well, not quite the energy point, but look where I've got this as kind of potentially condensing. So that's interesting. Maybe that's something we can keep on the chart in that time frame. And it's in the 1 hour. Is it in the 20 minutes? No, it's not. Uh-oh. Esther says, it's gone dark. Can't see the chart. Are you visible at the bottom corner? Netbroker says, click on the small screen, bottom left. I think I've read that. I've read that already, haven't I? Netbroker says, not you. I was responding to Esther. Got it. Okay. Everyone's happy. Okay. Everyone's all good. Everyone's fine. Everyone's fine. I forgot why I even did this now. I think I was just looking for more kind of ideas. Oh, that was it. Here was an idea. So we've done that pitchfork. Okay, coolio. I mean, that pitchfork isn't really kind of... It's not exciting me. I'll probably end up deleting that one. Let's see if there's see, this green one is interesting because price is responding to it. I'm noticing some really nice geometry, even beforehand, like up here. Bum, bum, bum. Like this geometry is really nice. I like it. Now let's see if there is something we can do there that would be meaningful. Cass is excited to learn how to use these pitchforks. I think it's modules 18, 19, and 20. In fact, not I think. I know it's modules 18, 19, and 20, which I'm going to package that as a separate course because it's a beautiful thing. It's so cool. It complements Edit Waves so nicely. Where's the high point? Oh god, I think it's there. Kaboom! Let's change that to... Let's go red. I don't think that's going to help us. Well, it's taken us to the energy point as well. That's interesting. And look how price broke out above, and I'm seeing some kind of congestion up here. Is there any... I'm thinking of like sliding parallel possibilities. I mean, you could have done one there, but then it didn't go far as that, so that didn't really do much. So yeah, it's not, price isn't really kind of giving us anything massive with this particular pitchfork. But again, I think I pointed this out before, didn't I? We had this nice touch down here. Kara says, yeah, I'm nearly there. Well, that's amazing. Like, look how far you've come, man. I mean, it's a lot there, right? It's taken a long time to get this far, to produce this. So, if I was going to create what I call an energy crystal, I suppose it would be kind of this. And I just call that an energy crystal as opposed to an energy point, because you've got like essentially different energy points that all form. So just call it an energy crystal. What time is it? It's 9:23. Is this blue one really giving us much? Where's my didn't I create a shift? Where's that gone? Okay, this is KuCoin, and this is they're both KuCoin. And where the bloody hell's this one gone? Oh, it's done that thing again. Okay. So sometimes it won't update if you change it from a shift to a regular, and then you switch to another chart. It doesn't update. Let's say it says shift, but it could just go back to original, then shift, and there you go. Let's put it all back in the right place. All right, so the shift is giving us something interesting, and the regular isn't, and the but the upper boundary of the I'm going to change my energy crystal to here. Actually, let's do that. There we go. That's my energy crystal. There's probably too many. And look at it; it looks a bit nuts. There's probably too many pitchforks. What is it? Too many chefs spoil the broth or something. And so now I've built this up slowly. It might be less scary for you guys, but it does look a bit nuts, doesn't it? It's kind of. I don't think it's necessary to have all this stuff on the chart. So it's probably best to take some stuff off. Let's change that green. Let's change it to a dark blue. If you're watching on Rumble for the first time and you're not following yet and you want to follow, then press that follow button. Or if you don't, then don't. And if you're watching on YouTube for the first time and Twitch, then there's follow and subscribe, and then you'll be notified. I think there's that bell, isn't there? Like, hit that bell. And you'll be notified when I go live again, which is every Monday to Thursday from 7 p.m. UK time. All right, that's like a sort of a macro kind of a analysis, right? Using pitchforks and obviously layered on top of the Elliott wave stuff. Don't think we should use both these pitchforks. Just because it's just looking a bit nuts. Okay, right now, because price isn't really responding to this blue one, I'm gonna, because like price has responded to this purple one, so I'm gonna just the purple one is the shift. Just gonna get, see, already it looks a little bit cleaner, just a little bit cleaner, just a little bit. And so if this wave count continues to play out, then what could we be seeing? We go down into a bit more detail. Then if that's the 1, 2, 3, 4, 5, then this would be a 1, 2, and then within that is the wave 3. 1, 2, 3, 4. One more push up, then that would complete the wave 3, and then perhaps a shallow kind of sideways wave 4, and then a final push up in the wave 5, and maybe that 5 would you know, maybe stop net brokers paper trade out here, and maybe that is wave 1 of the coming wave 5, or maybe 1, 2, 1, 2. Let's go down into a lower time frame actually. have a look. Let's get rid of this. So that's the wave one, broke through some nice market structure here. Nice, see that impulse, correction, impulse, correction, impulse, correction. So let's see if we were to create a base channel from here. It's just like classic Kennedy's base channel, Elliott wave principle stuff. Then so I think down here I said I'm not sure what degree we're in. That's like intermediate. That's nowhere near what we're doing. Sub minuet. What are we down here? I mean, if that move there is a sub minuet, then that means this move is a micro. There we go. So that means we'll go with the same. Yeah, that means we'll go for the same thing here. So and then 1, 2, 3, 4, 5, and so that means the 3 will be there, and then a 4, 5. And so if that should still be micro, yeah. Then we'd be looking at a oh shit, a 1, 2, 3, maybe a 4 there, and then the 5 here, and that would be sub minuet like that. And problem with that is that creates a very, very steep. Look at that. I don't like that at all. As the base channel there, like within this wave 3, the wave, that means this wave, this goes under the base channel, which I don't like. It does blast up above and then it comes down below. I really don't like that. Can it happen? Sure. If I place the wave 2 here, I'm just again sort of thinking in terms of market geometry, and then place this, and then place this here. It looks like there's a response to a kind of market geometry, and this is where you start to layer in what you've learned with market geometry and sliding parallels, and you can start to, because look, what is a base channel? A base channel is the same thing as a modified Schiff. Exactly the same thing. You're looking for market geometry, right? And so there's a frequency there. Is it relevant? And look, that's actually a sliding parallel from that. See that? So this is kind of breaking rules in a way, in that this wouldn't be a clear wave 2. This could be a WX and a little Y, and you wouldn't think that. You wouldn't assume that. You wouldn't like that. Wouldn't be your what you would decide. But when you layer on looking for market geometry and looking how price is responding to frequencies, you might come to conclusions that without that methodology, without those eyes, you wouldn't have concluded that. So we created a modified Schiff, which really was kind of just by going by eye and looking for market geometry. And in fact, if we even go from this point there, look at that. Is that? No, not really. No, I forget to say anything. So that's interesting. And then if we were to, this is like a warning line. No, that's not giving us anything. So I'm 1, 2, 3. Where's the volume? Yeah, there's the volume in the wave 3. What we'd expect. That's fine. 1, 2, 3, 4, and so wave 1, 2, 1, 2, 3, 4, 5. Let's look at the what I call the prophecy extension for wave 1. And so, yeah, I mean, this would be a very extended wave 3 if that's the case. 1, 2, I mean, that'd be a very extended wave 3. And then we would be expecting a regular wave 5 if that happens. And then here's the base channel for that degree. And so if that happens, then we could see the correction come down to here, and then we've got one more push up. Just a hypothesis, just playing around, doesn't necessarily mean anything. And then we go into the higher degree. Could that mean? Let's have a look. So 39,130, 39,130, 39,130. Yeah, I mean that would be up here, so it could come up and hit the median line again, let's say, or sort of oscillate through. And if that creates a 1, 2, 3, 4, 5, a wave 1, and then there'd be a wave 2 correction potentially down here. If that wave count plays out, and then that's hang on a second. So for this to occur like this, I would want to see 1, 2, 3. I would want to see a bigger move up, I suppose. Otherwise, correction down and then a wave 3. So to get this kind of manufactured market structure, you might have a wave 1 correction, wave 3 come up and hit the some kind of level, come down, and then you get like a failed 5th, and maybe that could create the double top, something like that. Again, I'm not saying I think that's going to happen. I'm saying I'm going to be looking out for that. But we've broken that market structure. We've broken this market structure. So you guys see that? And the more market structure you break, the more sign that there is a trend change that either is occurring or has already occurred. It might be too late. That's a lower high. And now we've got a higher high already. Oh, a higher high, sorry. Does this all make sense, what I'm talking about? I'm just sort of like, just talking off the top of my head. I'm just sort of freestyling. This is just my thinking about this. So we've got a nice impulse up, breaking the market structure. And this looks like the forming of a wave 4. Oh, look, go lower down. Looking like we're seeing a very nice... very nice correction forming. Oops. Nice correction forming. Now this could be wave 1, 2, 1, 2. This little thing is a little 3, 4, 5. But with this final push up, I'm kind of feeling, 1, 2, 3, 4, and then we got one more push up to the 3. I mean, look, we could there's some market geometry we could use here. Maybe let's have a go. I'm not saying this is definitely right. I don't think that's going to work actually. It's not bad, is it? It's okay. It's not amazing. Yeah. No, I think it's a little bit forced. I mean, to get this low here, let's see if we would have gotten something. Yeah, look at that on the nose. How cool is that? Right? And so if you use this market geometry, even though it broke out below, you have these, entry opportunities, and then breaks down, bang. And this is where it's different to like, I don't like when you've got a base channel specifically and price breaks down below the base channel. But here, like, just because you've got a high and price breaks out below or above your pitchfork, as long as you're not taking out the high or the low of the pivot, it's still potentially valid. So don't panic. And then look at it, price screams down, and there's all this beautiful entry opportunities to get into here as an entry, and then look, it just pings the median line absolutely pinpoint perfectly. Patrick says, "Hey, I saw here. I was sent here by a friend of yours, Stevie. Just thought I'd say hi." Hey, Patrick, good to see you, man. Stevie, a friend of mine, or you mean someone in the community? But yeah, welcome. Make sure you hit subscribe and follow and all the juicy stuff like that. Just trying to think. But you saw that beautiful market geometry. Like this stuff's no accident. It's really cool, man. All right, we've got 20 minutes left. Patrick says, "I believe a friend of yours." What, in real life? Stevie. I don't think I know a Stevie in real life. I used to know a Steve at school many years ago, like 20 years ago, but I don't run into many Steves. Stevie in real life. Unless I know someone via their online handle or something, but I'm not as much of a geek as I used to be in terms of, like, you know, knowing people by their handles. So Stevie. Yeah, get him to ping me or DM me and be like, "Bro, how can you not remember Stevie?" So, yeah, unfortunately, it's not springing to mind. But welcome anyway. Stevie boy. Yeah, I'm kind of all analysed out now. I'm getting a bit tired. So that's kind of what I'm looking at now. And, you know, hopefully that helps in some way. And I'm watching this for a like lots of people are talking about, you know, and this is the emotional cycle, right? When prices start to take off, then the next phase of the cycle is optimism, I think, or hope or optimism. But until price breaks out above this this sort of supply area here, I'm still bearish. And I'm still looking for a really good short entry, and just because of also because of the macro fundamentals, macroeconomics, all the fear that is going to be coming following what's coming with what people believe is coming with the banking crisis. And we saw what happened with the price of Bitcoin with the pandemic panic, right? So but either way, if you want to go long, as a trader, you want to wait for it to come back and come to you. And so we've climbed up high. Anyone who got long down here and down here, great, that's great trades. But now we've made these, we've come up here, we've reached this supply zone, and the structure of this, I still think, could very well be a 3-4 correction, and this would point to another move down. So I'm still looking as a swing trader. I'm still looking for a good short entry, but the only thing is I'm not looking at the charts all day every day, and really, like, I haven't really looked at the charts properly since yesterday. So I'm not, I'm kind of doing this in service of you guys in this stream, and at the moment everything else I'm doing is working on all the surrounding stuff around this stream, and you'll be seeing some of it soon. You'll be seeing how it's going to be inside the community and the academy and all that kind of stuff that we're doing. So but I hope this has been helpful. I'm gonna have a little drink. Patrick says, "What do you think of XRP? In what way? As a project, as a long-term investment?" I'm afraid I don't know enough about XRP. I've got a friend who loves it. He's a massive XRP, fan, and he's got a big old bag, and he's well into it. But I don't know anything about XRP. I'm afraid I can't. Patrick says, "I've asked Stevie to clarify." Yeah, I'm afraid I can't help you. But in the future of what we're going to be doing with the decentralists, I love the idea of. Sorry, I have a hair on my face. I love the idea of us going and exploring and looking for these hidden gems, because around like 2017, in that the last like big bull cycle, well, not the last one, but the one that led up to the end of 2017. I found some great little projects and made a right bunch of money, and I was like, right time, right place, listen to the right advice, and in putting money in just these completely unknown projects, and they did amazing, and so I especially because we're in a bear cycle now, so the biggest bear cycle that crypto's ever seen. So all the way down, no one's talking about like finding hidden gems and stuff. You got to just sit this one out. But as soon as we are confident that we're in the next bull cycle, and according to this wave count, I'm not saying that is true, but according to this wave count, I would be wanting one more push down, right? One more push down, and let's see, like one more push down that could stop and make it a truncated fifth and sort of come into the supply zone down here, or a push down there. And some people think it could go, there's like obviously this median line here, but we'll see. Whatever it is, I kind of feel that we are due one more push down, and then maybe that would then mark the beginning of the next bull run, and that's when we go, right, let's try and find some amazing hidden gems. And this is the power of a community, because all it takes is one person in that community to go, hey guys, I think I found something, go and check out whatever. And then we go and research it, and I'm like, holy shit, this looks really interesting. Why does no one know about this? And and we can find these interesting projects. And at some point, it would be great if we can bring on actually like paid researchers. Their job is to research all day. And how cool would it be if I come on the stream, or maybe that's inside the academy, and we say, right guys, oh, have we got something for you? Yeah, I like that. That'd be really cool. Patrick says, might be looking sooner rather than later, could move any day now, not financial advice. Might be looking sooner rather than later. You mean XRP? Like, I know that XRP have got the court, Ripple have the court case, and there's people. Let's go and have a quick look at it. What is this? The 1 hour. Oh yeah. So I remember like. Oh yeah. Oh, this is cool. Oh, look at this. It's fucking exploding. That's wicked. And I say it's wicked because I know someone who's got bags, right? And he's I won't say anymore because he wants to remain anonymous. So I remember it was on the stream. It was Anastasia, I think, who pointed it out. We had this spike up here, right? And then price kind of came back down. And then price is rocketing up again. That's wicked. I'm happy for my friend because he's got a lot, And so, mate, is this like the what do they say? Buy the hype, sell the news. And so there's a decision coming up, right, on the court case. And so I suppose this is the market speculating on what the result of that court case is going to be, right? I suppose. Because if the court case is negative, doesn't that like put the entire crypto space in some form of jeopardy, at least in America, under the jurisdiction of the SEC? And so, in other words, if they determine that the XRP is a security, then by definition, every other token is a security within American jurisdiction. As far again, from what my friend has explained to me. And so I remember this was on stream. This little spike happened, and Anastasia, who I don't think he's today, pointed it out. And so we went over and looked for news, and we didn't really find much. And later I asked a friend, and he said, because the court case is actually finished now, and they're just waiting for the judge's decision or something like that. So yeah, man, I hope this explodes. I really do. And be interesting to see how that court case, if and how that court case affects Bitcoin, although it never would have affected Bitcoin because the SEC has actually said, I believe it was the SEC or certain regulatory bodies in America have said that Bitcoin isn't a security. It's actually what did they say? a commodity, and what did they say it was? So I don't see how it would affect Bitcoin. Patrick says, if they win, it gives XRP basically a monopoly. If they lose, the crypto market will nosedive. It is a landmark case for the whole crypto industry. Yeah, my friend has shared that. It's kind of interesting, isn't it? It's almost like if the court case is negative, it could trigger the fall that I'm sort of anticipating here. And if it's positive, it might trigger the upward move that would complete this ending diagonal. And that would then, again, we will see. Because like my general kind of thesis of the way I do things is that I don't prioritize fundamentals. I prioritize the technicals, and I let the fundamentals guide me in a secondary, like a sort of a tertiary analytical layer. And so if my analysis is saying price is going to go up, and then there's fundamentally sort of bad news on the horizon, my belief is that the most that will do is suppress the upward movement rather than send it collapsing down, because the price action, the geometry, the crowd psychology is wanting price to go up. And conversely, if you've got bad everything, your analysis is showing you as price is going down, you get great news, it will give you a little blip up and then it will continue falling down. This is my idea, this is my hypothesis. It hasn't been back tested with like proven with dates and news and showing you. I'm sure it could be done. I'm just too lazy. I'm not lazy at all. I'm the hardest working person I know. But that type of like analysis and stuff just bores me, and I haven't done it. But maybe in the future I'll pay someone to do it. But anyway, yeah, nice to have you, Patrick. It's good to have an XRP. What do you call you guys? The XRP army, right? Or Ripple army? The XRP army, something like that. All right, it's 9 to 10, so I'll carry on for another 5 or 6 minutes. So I'll go back to XRP again. Yeah, this is cool. So that means so from about here, it's gone up in price by like 65% or so. Amazing. And it's broken this market structure right here, which is a great sign. There you go. Broken that market structure. Yeah, these key, like you can see like a support and resistance zone, like right there. See that? Oh, wrong button. Yeah, it's broken that. That's interesting. Oh, I think I did this, didn't I? Yeah. So when we looked at it last time, I started playing around with the pitchforks and looking for some market geometry that price was responding to. I wonder. Let's have a look. I wonder. Interesting. Look at that. This is very nice. This is very nice. Look, you've got the break of market structure. This is what I look for with what's called corner trades. You've got it climbs up, the break of market structure, comes back down, and multiple tests of the lower parallel. Lots of opportunities to go long. Yeah, look. Touch, break of market structure. This is the market structure here, right? Right. One touch, two touch, break of market structure, and a third touch. So you might have got in down here, and thing is where you're going to place your stop loss down here. So one touch, two touch. I mean, this second touch, you haven't had a break of market structure, so it's kind of dangerous. But you have it comes up and you break this market structure, and then you get the third test here. Now, if you had a very tight stop loss, right, like you might have got pinged, but because the potential target was this median line, which it just shot up and hit, then you can afford the stop, right? Again, just be careful of getting pinged like that. So that could have been a great entry if someone was, someone who's a market geometry trader, taking a look at that. Esfa says, thanks, Andy. Great session. Good night. Yeah, you're welcome, Esfa. Glad you enjoyed it. So that would have been a great entry. Really nice. I like that. Yeah, very cool. Look at that. Beautiful trade. All right. All right. That's enough of the charts today. So hopefully that, I don't know, was helpful. And so, yeah, less ranting today and more looking at the charts. And I think I focused on a particular topic and then tried to teach something. So do. All right, yeah, that's it. Oh. So tomorrow's the last stream of the week. If there's anything anyone wants me to focus on tomorrow specifically, then send me a DM. Otherwise, I'll think of another kind of topic and we can talk about that. And okay, so if you are a founder, right, you got into the founder NFT pre-mint, and I know there's a bunch of you here. Then we're continuing the discussion of the ongoing development of that project inside the Founders Club space in the network. So head over there and join in the conversation. E space oh god, is it E Smith, I think, and he's posted a whole bunch of amazing comments and feedback and ideas for the development of that. So jump in and give us your ideas and opinions. Like right now we're thinking of a good name for the NFTs, because we did have Decentralions, but then after the fact we realized that there's already an NFT collection called Decentralions, which was made back in 2019 or 20, or I forget when it was now. And so we've been thinking of new names, and I had an idea today. Because we're our community is centered around decentralists, right? We're decentralists, and the individual community members, we all love being called lions. You know, the symbol is a lion, and lions are badass and ferocious and courageous, and they represent all kinds of awesome stuff. So I love the fact that we're lions, and that's why we went for Decentralions. But what's amazing about decentralization is you have nodes in the network, and the network is strong and resilient because the network itself is stronger than any single node. It is a sum of its it's a sum of its parts. No particular node is the network can't be taken down by taking down a particular node. The node is strong because it has all of these nodes. And so I thought, like, what if it was the NFT collection was called Lionodes, like the Lionodes, and it means every single member, every single participant is a valuable node in this great network. And there's some interesting, fun ideas you can do with an NFT collection like that. So just an idea, but there's a few interesting ideas. There's the Aslanteans. Again, Aslan is the reference from C.S. Lewis from the Chronicles of Narnia. The second token is called Aslan token. And so there's Aslanteans, which is kind of a play of Atlanteans, the citizens and race of Atlantis. That's kind of fun. There's some people who are not into the Aslan reference, and they think it might be cool to just call it King Silver Lions, or call the collection the Republic of King Silver. There's some interesting ideas. So pop into the Founders Club if you're a founder, and yeah, we can start to talk about it. And I think I don't know if we can, if you guys want to talk about it on the stream, I'm totally happy to do that. And I said this. Well, I said I was going to do this last Monday, but next Monday I think will be a great a great time to do the raffle, the raffle live, where the founders can see what allocation that they've got, what allocation of Aslan that they've got. There's a bit of a competition there. I think Monday would be a good time to do that, and I'll send an email out to everyone. And then we can talk about the NFT collection, not the entire time, because there's some people who didn't manage to get in on that founders pre-mint, and so we'll be talking about something which is kind of outside of their interest, let's say, but we might talk about it a bit. We'll see. So that's it for today. It's now, there we go, it just hit 10 o'clock. Perfect, beautiful. So I was on time to start the show, and I'm going to be on time to end the show. So thank you for joining, everyone. That was a fun show. Thank you for your input. And I'll be back tomorrow, and I'll be on time tomorrow for the first time, for the second time. So, so before we go, I want to see 3 emojis. 3 emojis. Give me your emojis. Nom, 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 nom. I want 3 emojis with any theme whatsoever. In fact, I think we can go out strong. We can go out with the theme tune. All right, sod it. I don't need your smileys. I'm out of here. Bye.
Counting down the days, the future feels so distant. A lot of things have changed, and few have been resistant. Devaluation reigns, and fear of self-destruction. Adapt to be replaced, and follow their instructions. So they waste all we made for your corporate palisade. You won't automate our roles if we digitize our souls. Under force we'll intervene, half human, half machine, and no enterprise on earth will make us kneel to your empire of steel. Recoded, we'll reboot. An uprising is moving, and the